Good evening, everybody. This is your executive summary for the 11th of August, and what a market it's been. Let's flip over to the incredible charts. So, of course, we've seen the S&P 500 do just what it should, rallied up, came back down at the end of last week to test exactly where that second shoulder was, rallied up on Monday. Now we're converging. You can see the head and shoulders here. With a sideways consolidation triangle here. Currently, the futures are down significantly in the Nasdaq. Excuse me, on the S&P, and it's looking like this market should is starting to have some real trouble. Now, looking at some of the stocks that, or some of the newer stocks that we've got to check out tonight. The first one is actually looking at gold. So on the long side, gold's looked actually fairly interesting. You can see that it had a nice rally up, had a hammer candle close today, and I think this should be able to run up from 1110 to at least 1120, but possibly even as high up as this level up here at 1150, because we've got this kind of downward channel, almost like a bump and run formation where we rally up and hit that resistance. So just check that out. Now, how do we play that? Well, what I'm looking at is NUGT, which is the gold miners. A lot of all the bulls have been shaken out, and you can see this lovely kind of this basing pattern on NUGT. Now, we looked at this on Friday, and it hadn't quite yet recovered over its moving averages, but it did over the certain last 2 days. It has certainly had a big rally, up 19% yesterday, and up 5.6% today. So a huge rally for the last 2 days for traders, and this could be an easy pop to at least $6, possibly higher, all the way up to this resistance level from the 50-day moving average at 653. It's had big moves like that before. As you can see over here, we went 15%, then another 10, then another 6. And then until it started to peak out. But you go back and look further, you can see even more impressive rallies where it went from 10 to 21, which is actually one of the last times we had selected this as a long. And so doubling the value, from down here in the $3 range to 6 is not out of the question at all. So how would I look to play this? I'd look for a pullback. Ideally looking for a pullback to the to 363 on NUGT, and looking at a stop loss at 344. So it would be basically how I'd ideally want to see that play out. The other option is just simply play the breakout. If you look at the 15-minute candle, okay, you can see that we are at a double top. So again, you can see this level here kind of pulling back around to that 345 areas where that previous resistance was, and you get your support coming in around 350. So looking at that again, that 360 level would be just ideal. And then so I pull back to here, or we could be looking at a breakout scenario, in which case I'd be looking at a long at 403, and I'd be looking at the stop loss criteria here at 377. So one or the other. Okay. Now let's go to the next one. The other one, just to be a bit contrarian, because I'm very short this market, but just to throw another one out there to be a bit contrarian, is CFX. Now they had some significant insider buying at the beginning of this month. So CFX is in diversified machinery. It's not fundamentally something we'd really pick, but it's had a really nice rally up and a pullback to support. And Colofax, given the insider buying and the type of pattern that it is, I wouldn't mind giving this a shot from basically looking at an entry point just above 41. It's looking like 41, 4103. So as an entry, up to 43.89, which gives us almost $4, excuse me, $3 on the upside, and I'd look at a stop loss at 39.83. So we've got about $1.20 on the downside with $3 to the upside, so pretty reasonably good risk-reward ratio, and so that would be the other one on the long side. On the short side, here's three new ones. Zoe's. This has a P to E ratio estimated over what was it here? Over 1200. So huge P to E ratio. It's in a consolidation pattern. Money flow is moving to the downside. This could be a good short opportunity if it rallies up into this kind of 43.33 area as a rally into resistance, or if we have a breakdown below this support area. Let's have a look here. What we're looking at, the low of this candle, 39.27. So a break of 39.27 or a rally to 43.30. Either one of those could be decent entry points here on this stock. And obviously you can see that it's relatively new, but really big P to E ratio. It's only been on the market since April 2014. So the potential for this is really, we don't know. It's been in the bull market this entire time, so we don't know how low the bottom could be if this market falls apart. But I'd be looking at a first criteria or target on Zoe's of 40. Let's have a look here. Okay, so we're looking at 45.13 as a stop criteria, and I'd be looking at 35.28 as a target. And we could go, of course, a lot lower than that, but that would be the first place I'd look at. CMCM is the next one. This is sitting. This has got a lot of exposure to the Chinese market. It's currently at $23, already breaking down. This is a Chinese mobile company, and this has a 58% short float, P to E ratio of 255, no dividends that it pays, and earnings on August 18th. So this could be an awesome options play or a stock play, and could easily drop at least 50% in value. So if you just have a look, I mean, we've been as low as $12.50 before in 2014. So this could certainly get this one. And so looking at that as a potential short for tomorrow. And I'd be looking for it to either to rally up here into this area around 24, so rally up $1, or just simply break down below the low of this candle at 22.71. And this is a momentum play, so we just keep adjusting the stop loss. And the current stop loss I'd look at would be at 25.34. And last but not least, CSC. Now this one's got a P to E ratio of about 1284, and this is again big head and shoulders on the macro time scale. You can see that's left shoulder, head, right shoulder. We're now in a downward channel, which is typically bullish, but it's coming out of a macro bearish pattern. And what's interesting is on the short time frame, if you look just here, there we go. Look at that. If you can see that, you've got this nice little head and shoulders pattern on a smaller time frame. There you go. So you can see that. So if we get a breakdown, we could break at least to 61, but possibly on the macro head and shoulders, that was just 56. So this one I like. I'm looking for a break of 63, and if we get a break of $63, that's where I'd look to enter this trade. I've already talked about this before, but I thought I'd bring it up again. This one I'm a big fan of as well. Okay, so that's the executive summary for tonight, and we'll see you all tomorrow. Take care and happy trading.